Hey traders, welcome to another video. In this video I will be talking about a trade I took on GU today. Today was quite a sketchy day, so to speak, with the news that was coming out today. These are what you're seeing now. It's quite messy. These are screenshots that I sent in the Discord channel this morning, where I basically did my analysis, my daily analysis. If you're interested in something like that, basically, I drop analysis based on ICT concepts in my Discord channel. There are a lot of like-minded people also trading ICT concepts, so you can definitely discuss your trades and gain a lot of value. So if you're interested in that, it's completely free. Feel free to join, no obligations. So yeah, let's get into the video. So as you can see on the daily chart, my target was the buy-side liquidity that was resting above the high from the 24th of January. Other than that, I saw a nice reaction right here, a nice move upwards, and that's why my bias was bullish. As soon as we take out this high, I will have to see what my bias says based on the previous days, but that's what I was looking at today. So today was bullish for me. Now let's jump to the screenshot that I sent for the 15-minute chart. So what I immediately noticed was that we had a nice reaction to this fair value gap right here. This was from yesterday, so that's a fair value gap reaction from yesterday, and we also respected this breaker block right here, and price reacted really nicely off of that. And then I noticed at the time I sent a screenshot, which was around 6 a.m. I noticed that we tapped into a fair value gap, and what I expected was either a slight reaction filling up this really tiny fair value gap that we have right here, or we could either go down, sweep the internal sell side liquidity before then moving upwards. That was my ID for the day. So following my daily bias, I'm not saying that this target has to be hit per se, but that would be a target where I would take off most of my position, where I would probably close full and not really be bothered about that high from the 24 being smashed. Of course, if news is in our advantage, we could see that smashed, but I would not per se want to be holding my trade through news if I could get a decent risk to reward right here. Okay, so let's get into the charts. So this is the 15 minutes. Let's quickly redraw this. So this is the fair value gap that we reacted to. Here we have our breaker block, and then our reaction to fair value gap right here. So what you noticed was from, I think, this candle, right at 6 a.m. That's a small reaction. We actually tap into this small fair value gap that we have right here. If I zoom in, it will become clear. So we tap into that, move further into that fair value gap. And then the New York session was about to start, right? So it is now almost 7. Let's go one further. There we go. So now our New York session is live, and what I immediately noticed is that we now basically have some equal lows right here. So I will be paying close attention to this swing point, especially because we had this nice reaction to the fair value gap right here. That's why I was really interested if this liquidity got swept, and we see some equal lows also being swept, so some decent liquidity on lower time frame. I could definitely see myself taking positions going along, targeting, again, which I marked before on the screenshot, the buy side liquidity. So let's actually mark that out. Let's also mark out our sell side liquidity. There we go. And those are basically the most important things. Now what we can also do is define within this leg our equilibrium. Let's also do that. So this is going to be EQ. There we go. So now we know that we are in a discount zone and we can put on a lot more risk if we want to. So usually if I use full risk, I will be risking 2%. But today is of course a news day, so that's why I decided not to. And I will explain why a bit further. All right, so as we can see, what do we notice? We notice this low that we created right here, which is a really clean level on the 15 minute. And then we actually tap into that again, creating, what do we see here? What would retail traders think? Well, this is quite good support. So what would people be doing? They would be setting their orders right here, their stops just below this level, and then targeting the upside, right? What we are going to do is use their orders, use their liquidity that's down here to then right to move upwards. All right, so it is now 7:14, and as soon as we sweep that, I will start looking for a entry long off of a fair value gap. And as we can see, we immediately smash that liquidity, take it all out. And now I want to see some structure form, so I can actually register a market structure shift before actually going long. So as we can see, we have some imbalance, and we already have some sort of a reaction. As we can see, we have a pin bar reacting to this fair value gap right here. Price shoots off of it, but we couldn't have taken a trade here because we had to break this market structure, right? This was the closest swing here. And now we have another bit of market structure, so we can actually take a trade. Right, so we broke this high, meaning that the market structure has shifted. And do we have a fair value gap? Yes, we do. Mark it out. This is our fair value gap. There we go. And now we basically have all our confluences needed for a simple entry model, a simple ICT entry model. So we have our 15-minute liquidity being swept, which is this low. We then also have on the lower time frame equal lows being swept. We have decent displacement down, decent displacement up. We have a market structure shift, and we have our fair value gap. These are all the criteria met for entering a position. So let's smack one on. I personally will be covering the low, simply because this did not really get filled efficiently. If you were looking at price action, it tapped into it, shot out of it. And I do expect that we could potentially move lower down. And that's one of the reasons. If that was the only reason, I would have probably covered something like this to make the risk to reward more interesting. But ultimately, if we take a look at the chart and we look at the equilibrium, right, which is right here, what do we see? We see a clean high, which means a clean bit of buy-side liquidity, internal buy-side liquidity, right? So we have that right here. And what could we ultimately target? There is more internal buy-side liquidity. There we go. So how would our order look? Probably something like this. We could target 2.3R here. We could take partials there. So my plan would be to take 50% off of my position there. And then right here, I would close full. So that would be my target. And then again, really important when you're trading Forex, always keep in mind that you add a pip to your stop loss. It's very important. When taking longs, it's not that necessary, but we do expect more price fluctuations than we would see in futures, right? So lows could just get tapped and then we move on. So that's why I'm going to be covering 1 pip extra. The risk to reward of 1 to 5 is still plenty to me. So that's why I set my order like this. So let's see if we get tagged in and how the trade plays out. We actually get tagged in right here. Let me zoom a bit. So we get tagged into the trade right here and we start moving up. Then we actually pull back quite steeply and then we have a really strong move upwards. You could have actually had another opportunity right here, right? We had new fair value gaps formed. So let's say you didn't take the trade, you could re-enter if price were to return to this level or to this level right here. And that's why I'm also not concerned with price coming back to these levels, because there are more fair value gaps to be filled, right? As we can see, we tap into that fair value gap, react to it, and then move even lower. And at this point, I was really thinking, okay, I'm going to get stopped out here. And I was barely still in the trade. I think it was a few points away from actually throwing me out of my position on MT5. We start moving up again, but now something really important is coming up. If you look closely, right here, what's this? Well, we have news coming. And we don't want to be holding our positions during news. Or what we could do is move our stop to break even. But especially with news like this, it's very, very volatile. So you could experience extreme slippage. What do I mean by that? Let's say you have your stop at break even and price comes down really aggressively. What happens? It could be that instead of being filled here and getting out of the trade at break even, you would only get filled right here and take a big loss. And that's not something we want, right? What I did is I noticed that news was like a few minutes away, 2 minutes away. So I decided to close my full position right here. And that was for 1.4 R. That's what I made today. So that was the whole trade for me. And I was very happy about my decision. I don't usually hold my position to reduce unless I really have a big buffer. So I'm running a bunch of pips in profit, but here it was not the case, as we can see. I was only in profit for about 12 pips, which is nothing. I've literally experienced slippage of 16 pips on GU, so you have to be really careful with that. So yeah, at that point, I decided to close my full position for the 1.4R, and then the market started to really go crazy because of the news, as you can see. And then for the people who are interested in ICT and really don't care about the news, are really strong-minded, have a strong stomach, what you could have done, if you look right here, you see we have a sweep of all this liquidity down here, right? So the sell side liquidity that we marked on the 15-minute just got swept here. And then what do we see? We see that we have a fair value gap form. We tap into the fair value gap and move on. Do we have our entry criteria met? Not really, because we don't have a clean market structure shift. I would not look at this high being swept as a market structure shift, not at all. What I would be looking at is this high being swept. And once this did, that's our market structure shift. And as we can see, we're going to be forming a fair value gap. So what you could do is take a position here, cover the low. And then for the target, we could be looking at the target from that high where I was planning on taking 50% of my position. And we could let that trade rock. And as we can see, that would have worked out. But honestly, this is not a trade that I would ever take. I don't usually go for trades that are below 2R or 2.5R. So if you have a really strong stomach, like I'm saying, you can go for this trade, but it's not one that I would personally take, to be honest. And that was it for the New York session for me. Let's see if we could have taken any more entries. I actually didn't look at the market afterwards. And at this point, at 10 a.m., I would stop looking at the market completely. So what do we see? We have a really rangy day. We took out both the highs and the lows. So probably a painful day for most traders. I got lucky here. I could have just as well been stopped out. I realize that. So this is, I'm not, by no means is this a good trade. I just use my experience, my risk management, and my data to actually take something from the market instead of the market taking something from me. So yeah, that was it for today. If you have any questions related to this trade, feel free to drop down a comment. Or you could also join the Discord server for completely free, where I would be more than happy to assist you with your questions. Also a bunch of members there who are more than willing to answer your questions. So yeah, I hope to see you there. If you liked the video, make sure to drop a like. A subscribe would be amazing. And like always, guys, thank you so much for watching. I hope you got some value out of this. Talk to you later. Bye-bye.